As we enter into the final week of campaigning, a second Trump presidency hangs over Brussels. Welcome to Macro Matters, your regular look at what's driving the global economy. I'm Peter Devlin. The world financial leaders gathered in Washington this week, tasked with the usual talking points of inflation and interest rates. But what really dominated discussion was Donald Trump, as the former president's potential return to the White House loomed large. ECB President Christine Lagarde challenged Trump and suggested a visit to Frankfurt to experience the challenges faced by policymakers. But will Lagarde regret her invitation if a Trump victory becomes a reality? And what are the impacts on Europe? To help answer that and more, I'm joined by Andrew Kenningham, Chief Europe Economist at Capital Economics. Welcome, Andrew. Thank you very much for joining us. So let's start with trade. And Trump has frequently pledged to impose goods tariffs as much as 20% on everyone. Several organisations estimate that could reduce Eurozone GDP by at least 1%. So are these growth fears overblown?
Well, definitely the tariffs on that scale would have a negative effect on Europe, as on most other countries. And it does look very likely that Donald Trump would introduce such a tariff if he were to win. So it is a concern. However, I do think some of the estimates that you're quoting there are too high. If you look at most of the calculations of how sensitive export demand is to the price level, you get much smaller reductions in exports and GDP. I mean, I think it would be significantly less than 0.5% of GDP in terms of the total impact on the European economy of a 10% across the board tariff. There would be bigger impacts on some countries than others. Germany would be worse affected than most. And for some particular industries, it could be still very substantial.
So for the reaction as well, Goldman Sachs said that the euro could drop as much as 10% versus the dollar if Trump wins, leading some to argue that a slightly tighter monetary policy is coming up. Do you see this as likely, and how much will the election play into ECB's decision making?
Yeah, I do think the euro would weaken if Trump were elected. We have a forecast that it would come down to about 105 immediately after the election, so small depreciation. But then if Trump were to press on with the tariffs as planned, then after his inauguration next year, it could easily drop to parity or a bit below, and that would be about a 10% fall. So yes, I think that is distinctly a distinct possibility. However, I don't think it's going to have a big influence on the ECB's policymaking. If you think about how much that shifts through to higher prices in Europe, I think the impact would be really quite small. A 10% depreciation might push up the price level by less than 0.5%. And the ECB policymakers would probably look through that because they would see that as a one-off impact on the price level rather than a rise in underlying price pressures.
So let's keep with the ECB and recent data points. Eurozone business activity stalled again this month, while Germany business morale did improve. Investors seeing a roughly 50% chance now of a 0.5 percentage point cut in December. What are you betting on?
Yeah, I do think they are likely to go for a 50 basis point cut at this point. There's still more data to come out before they need to make a decision. They will have data on inflation in both October, which we get next week, and on November, as well as a bunch more surveys. So it's not a done deal yet, but there's been a pretty significant shift in thinking on the Governing Council. And the inflation rate is much lower than they had forecast it to be when they last published some projections back in September. So they'll have to cut their inflation forecast when they next meet. So I think that they now will recognize that monetary policy is too restrictive, and then they can remove that restriction fairly rapidly. So I think 50 in December is highly likely.
So finally, Andrew, and ECB Hawks have pushed back against bets on more and bigger cuts. Comments yesterday from ECB's Gabriel Makhlouf saying it would take powerful data. So how much worse does the data need to get before the Hawks get on board?
Well, I think what's striking in the comments that we've had over the past few days, and there have been a lot of them, as 17 of the 26 policymakers on the ECB Governing Council have spoken, is that there has been a lot of consensus that they are much more confident that inflation has come down. Actually, there's been very little pushback from traditional hawks. Mr. Makhlouf was an exception, but if you look at some of the traditional Uber hawks, even Robert Holzmann, the head of the Austrian central bank, said that a 50 basis point cut is possible. So I think the hawks actually are not resisting nearly as strongly as one might have expected.
Andrew Kenningham of Capital Economics, many thanks for your thoughts. And that's Macro Matters. Don't forget, you can watch more videos on Reuters.com.